Okay, so it looks like the numbers are leveling off. So thanks to everybody for joining. We will probably be best to crack on. First of all, a welcome. Like I say, good morning, good afternoon, good evening, wherever you are in the world. My name is Robin Thornton. I'm a partner with Holborn Assets. I'm hosting the webinar today, and presenting is my colleague Edward Harris. Ed, would you like to introduce yourself, so to speak?
Certainly, thanks, Robin. Yes, Robin mentioned I'm a managing partner of Holborn. I look after the Americas, so as part of that, I'm also CEO of our US SEC regulated investment advisory firm. British, as you might guess by my accent. I left there in 2008, spent 10 years in Hong Kong as an investment advisor. More recently, I lived in the States for 3 years. My wife's from California. But I moved to Portugal just over a year ago with my family, 3 girls. So I'm living in southern Portugal, Algarve now.
So is that your back garden? Is that what you're trying to say?
Front garden. And it does pretty much look like that at the moment.
Okay, all right, lovely. Thank you for that. Okay, could you just flip the agenda slide up? I'll just run through what the agenda is for the meeting today. So we're going to try to keep this relatively succinct. We've all done these webinars and stuff before. I think it's best to keep them, to the point, and then we can follow up afterwards with any individual questions perhaps or queries. There is a Q&A, in the chat box. Feel free to post any questions there, and we're happy to answer those, at the end of the session. So basically what we're going to do today is just run through who we are in terms of Holborn Assets and Archway, as Ed was saying, in terms of the link. Run through, what the similarities and differences are of the two programs. There's been a lot of noise in the press, particularly of late. Give you some examples of those investment options. Some of you will be familiar with them, I'm sure, but it doesn't help to reiterate some of those. The changes that have been announced of late in terms of Golden Visa programs and on the two countries, and perhaps even what may happen in the future. Or we don't have a crystal ball. And then just something that's obviously become a lot more topical of late, and that is the consideration of foreign exchange and how particularly investment into Europe and also to places like the UK has become much cheaper for dollar-denominated or dollar-pegged currencies. And then, like I say, we've got a Q&A section at the end. So again, please post any questions that you have in the chat box. Over to you, Ed. Okay,
thanks, Robin. So just very quickly as an introduction in terms of who we are for those who aren't as familiar with us. Holborn's an international wealth management firm. We've been going over 20 years. Head office is in the Middle East, but we have offices on every continent, looking after a couple of $1 billion worth of assets for clients. And we set up Holborn Pass a few years ago, which is the part of Holborn that looks after citizenship and residency by investment projects. And we offer about 22 different programs. So Greece and Portugal are by no means everything that we do. Last year, we did 9 different programs with clients. But Portugal's very much been the sort of hot ticket globally for the last few years. Last year, we did 143 Portugal Golden Visas, which pretty much makes us the largest operator in that space in Portugal. So it's an area that we've got some good experience on. I just mentioned this, I know we've got quite a few US people joining us today. Yeah, we do have a US investment advisory firm, and I do look after that as well. But we trade under the name of Archway Private Wealth in the US. So moving on to the more interesting stuff for people. Greece and Portugal, I guess picture sometimes speaks 1,000 words. For those who haven't had the pleasure of being to these places, that's Lisbon on the left-hand side and Athens on the right-hand side. And without wishing to state the obvious, These are both amazing, beautiful places to live. I'm very fortunate with my work and my life to travel to somewhere 45, 50 countries now. And this sort of new nomadic lifestyle, you know, I could live anywhere for my work. I've chosen Portugal. For us, it was the right thing and no regrets. That said, Greece is definitely one of my favorite places in the world. I think I've probably been 8, 9, 10 times over the years. A fantastic place as well. So again, as we were saying, beautiful sunny Mediterranean climates, lovely warm summers, short, only cool winters, low living costs, delicious food, so much culture, very friendly people, lovely safe places for you and also if you're bringing your family as well, amazing beaches, public health care. And I don't want to dwell on these particularly and go through them and spend too much time on them, but they aren't just marketing words. Anyone who's been lucky enough to spend time in these countries would attest that these are very much the hallmarks of these countries. And one of the reasons why, you know, the Golden Visa programs have been so popular in both of them. But that said, if you're on this call, you probably already know a lot of these things anyway. So let's move on to some of the things that are more specific to actually getting the visas and the Golden Visas. They both have real estate as by far and away the most popular way of getting the Golden Visa. In Portugal, it's about 95% of people who apply for the Golden Visa use real estate as the mechanism, and the numbers are broadly similar for Greece as well. They both give the time frame from applying to being granted and receiving a residency card. That should happen within a 12-month period. Over COVID and after the Ukraine situation, things were a little bit stretched, but that should still be very much the goal for both schemes. Once you have your residency permission, then you also are able to travel visa-free to the rest of the EU and the Schengen area in both cases. And they both offer pathways to get a passport, a Greek passport or a Portuguese passport, and as member countries of the EU, then all the rights that go with being an EU citizen as well, and the ability to live, work, retire in any of the EU countries. And they're both very established programs. They've both been going over 10 years. There's been some changes along the way, which we're going to touch on in a minute, but let's say well-established programs. So that's some of the similarities that there are. In terms of some of the key differences, so run through these one by one. The idea is that you're making your application at the beginning, you're making your investment, that's granted, you get your residency card. In order to maintain your residency status, in Portugal, you have to spend a total of 5 weeks in Portugal over the 5-year period. In Greece, there is no requirement, so you don't actually have to get on a plane and go to Greece, whereas in Portugal you do, albeit you actually only have to make 2 visits, one in the first 2 years and then another one in the next 3 years. So not a great requirement to maintain residency in either case, but it is different. In terms of working in the countries, in Portugal, there are no restrictions. You're allowed to work for a company in Portugal, work for your own company, work remotely, whereas in Greece, you're only allowed to work for your own company in Greece or work nomadically. You can't get a job for a Greek company in Greece under that program. Tax regimes are slightly different. Portugal has an excellent tax program that's available for 10 years for people moving there. It's called NHR, which stands for Non-Habitual Residency Program. Today is definitely not the time to go into that in any great detail, other than to say, at a high level, it generally means that you would only pay tax on your Portuguese sourced income for 10 years. So if you have rental income coming in from overseas, dividends, interest, those types of things, then you're not going to pay tax in Portugal. Whereas in Greece, if you have become resident, so you've moved to Greece, then you are taxed on your worldwide income, and the income tax rates start at 22% and do go up quite quickly afterwards. In terms of who can be included, in both cases, there's a main applicant and their spouse can be included. Dependent parents can be included. They also allow children. Slight difference. Portugal is children under 18 or in full-time study, there does tend to be an upper limit of around 25, 26 years old, whereas Greece has a more clear-cut children under 21, yes, over that, no. As I mentioned, the main mechanism that people are using to apply is through property investments. In Portugal, there are actually 4 tiers or 4 investment tiers, depending on how old the property is and where it's located. So they are 280,000 euros, 350, 400, and 500,000 euros. Post the changes that happened in January of this year, where residential property in the sort of popular areas, so Lisbon, Porto, most of the Algarve where I live, they were disqualified from qualifying for the Golden Visas. So most of the investment that we're seeing now goes into commercial properties, whereas in Greece, residential property is all okay, there's no restrictions there. And at the moment, the investment requirement there is 250,000 euros. Finally, on a route to citizenship, so getting a passport, Portugal, as I mentioned, you just have to do your 5 weeks in 5 years. You have to pass A2 level Portuguese. A2 is a beginner's language course. I'm actually having my lessons once a week at the moment. And in Greece, slightly different. So you actually have to have lived in Greece and be paying Greek taxes for 7 years before you can then apply and obtain a Greek passport. Whereas in Portugal, the clock starts ticking on your 5 years as soon as you've been granted your temporary residency permit. So you could actually only spend 5 weeks in Portugal and end up with a Portuguese passport, whereas in Greece, you have to have lived there for 7 years in order to get a Greek passport. So that covers some of the similarities in the scheme, some of the differences in the scheme. I next wanted to just look at a couple of examples of projects, just to give you a flavor. We have typically at any one time 9 or 10 projects available in Portugal, Greece, more like 7 or 8. Again, obviously not possible to go through them all today. So I picked ones that were deliberately different, but also some favorites of mine, just to give you a feel for the types of opportunities that there are. So in no particular order, but starting with Portugal. So this is an existing development. You can go on booking.com and go and stay here and read the Google reviews on it. The Royal Obidos Golf and Spa Resort. So this is about 45 minutes north of Lisbon on the famous Silver Coast. And it's also just around the corner from Nazaré, which is famous for having the world's biggest waves for surfing. And because this is a new build, and it's in the sort of Lisbon vicinity, this sits in the highest of the investment categories within Portugal, which is the 500,000 euro investment. There are studios, there are 1-bed apartments. In this, you buy and obtain a full title deed to either the studios or the 1-bedroom apartments. So same as if you're buying any other investment property, but within this commercial enterprise of the hotel. It's a 5-star resort, one of only a handful in the area, brand new, purpose-built, designed by Philip Stark, who's a famous designer. There are 4 golf courses as part of the resort. The main one is designed by Sevilla Ballesteros. It's very high-end. It's where the Portuguese Open is played. And although it is a commercial investment and a commercially operated, so this is for typically for tourists coming to stay here for short periods of time, golf breaks, holidays. The developer does allow you as an investor to come and stay and use the facility for 6 weeks a year, or indeed to offer those weeks out to friends as well. But you can't stay in this all year round. This isn't a place for you to live. This is a commercial investment, a very good investment. And as our background is as investment managers, we're always looking to find investments for clients that make sense as a standalone investment, even without the Golden Visa. In terms of how the financials work for this, again, this is just going to be at a high level because we would go through this in much more detail with people on a one-on-one basis. But the unit that you acquire would obviously be rented out by the hotel on your behalf. They will pay you a rental income of 7% a year, which they will guarantee for the 5 years that you would need to own this in order to qualify them for your passport. What we do and have arranged with them is that they will pay that rental income up front. So that helps reduce the amount of capital that you actually need to put into the investment. So yes, it's a $500,000 investment for the 1-bedroom unit, but actually you're going to get some cash back from the developer at the beginning, so that reduces the amount of money that's actually required. And at the end of the 5-year period, you have lots of flexibility. You could either sell it back to the developer. There's a guaranteed buyback, so they would buy it back from you at the original list price of $500,000. You could keep the unit and just carry on having them rented out for you, and you continue to get what is estimated to be still sort of 7% per annum. Or you can, in fact, as it's your unit, you can just go and sell it on the open market. So lots of sort of flexibility for you at the end of it, but always good to know that there is a developer that's willing to buy it back from you at the end of the period. So at a high level, that's one of the projects that we have available in Portugal. In Greece, this is one of my private developments, which is just outside of sort of downtown Athens. It's sort of, this is 3 miles, 5 kilometers from the city center. And Athens is a big, busy city. So I think it's nice to be closer to the beaches, closer to the sea. And as part of this new development that's going on near the port, where there's lots of, the marinas are here, the stadiums are here, lots of shops and restaurants. Very high-end development. This is all Villeroy & Bosch, high-end fittings, granite surfaces, Spanish tiles, beautifully done inside. And quite large apartments as well. These are typically 2-bedroom apartments that are about 80 square meters or 800 square feet. And because this is residential, you have the option to go and live in it, or you can have the developer rent it out for you. They'll guarantee a normal rent of about 3% on this development. Or you could Airbnb it, have the flexibility, it's yours, you can do what you want with it. So again, lots of flexibility here. So there's a couple of examples of projects. So then on to some of the changes that have been going around. I mentioned Portugal changed on the 1st of January, so that took out residential in most of the main, or certainly the popular areas to live. They also increased the investment amounts on the other routes. So there are things, for example, you could just put some euro cash in a Portuguese bank account. That used to be 1 million euros, now it's 1.5 million euros. They increased the investment amounts, pretty much all the categories, by about 50%. The only one they didn't touch at the time was property. The UK has recently sort of scrapped its scheme. Turkey has already increased its scheme from 250,000 minimum investment to 400,000. And Greece has now also announced it is going to increase from 250,000 to 500,000. So the property that we just looked at would no longer qualify. Although it hasn't stated exactly when this is going to come in, but the Prime Minister has made the announcement. I think a relatively safe assumption is probably somewhere near the end of the year, but we don't know and don't have the visibility on that. And to give some context, Portugal launched at 500,000 euros. Turkey was actually at $1 million. But then Greece came in at 250, and then Turkey brought its down, and then Portugal then introduced these lower tiers for refurbishments and in low density areas to bring its bottom level down to 280,000. So now Turkey has gone back up to 400,000. Greece is going back up to 500,000. It's not a big reach to assume that as its competitors have now doubled their prices, that Portugal would be considering doing the same. The reason that, probably might see on the bottom left-hand corner, the reason the Greek Prime Minister sort of noted that they were increasing the Golden Visa from 250 to 500,000 was because the programs have become so popular that it's making real estate unaffordable for local Greeks. The property market in Portugal is still incredibly strong. It's up 20 to 25% this year. So there's definitely the same internal issues going on in Portugal at the moment. So definitely something to sort of watch this space. Robin mentioned exchange rates. This is a chart that goes back to actually the birth of the euro in January 1999. And it's now at the lowest level against the US dollar for 20 years. And in fact, just in the last 12 months, the amount of dollars or in a dollar-pegged currency, like the dirham in the UAE, then the US dollars required to get yourself your EU Golden Visa has dropped by 20% in just the last 12 months. So in terms of timing, it's something that's quite fortuitous at the moment if this is something that you're thinking about. So a lot of information. So if I can just kind of bring it together at the end. To summarize, there are no wrong decisions. Both countries are amazing and offer the chance for a fantastic life. When I say referring to whether plan A or plan B, some people we speak to have this definitive, I'm getting on a plane on X date and this is what we're going to go and do. And if so, fantastic. Other people just want that optionality, the plan B. If this happens, then we want to have the ability to move aboard. Or this is something we want to do in the future, and we now know that now is a good time or a good opportunity to be able to do it and secure that option for the future. In which case, yeah, absolutely couldn't agree more. In terms of just some slight differences, and to summarize, Greece has less investment restrictions, so residential property anywhere, and its cost per square meter for property is lower than it is in Portugal. For now, it is a lower entry point at 250,000 euros. But as I mentioned, that isn't going to be the case for long. Having already announced it's going to go up to 500,000 euros. It does have a slightly tougher route to get a passport. You have to physically live there and be paying taxes there and do that for 7 years. It doesn't have this sort of special tax program for the first 10 years that Portugal does have. Portugal is immensely popular and I think the most popular scheme around at the moment. Not just for Golden Visa, there's a lot of sort of people moving from within the EU. I was at a birthday party the weekend and there were people there from Spain, France, Belgium, Germany, Switzerland. A lot of people moving to Portugal internally and therefore pushing the prices up generally. It's not just people moving in from Golden Visa. And I think it was last week, Portugal again came top. Lisbon was the best place in the world for digital nomads and best place to retire, and all for good reasons that we touched on very briefly earlier. And as I mentioned, Greece has already announced that it's increasing to 500,000, timing to be confirmed. Portugal already changed their rules at the start of 2022, increased the levels by around 50% for every area apart from property. But with property still rising at about 20% per annum here, other countries increasing their Golden Visa minimum levels. There's strong reasons to think that Portugal must be considering doing the same thing. In terms of timing, as I mentioned, euro currently historically extremely weak, lowest in 20 years, thus making an investment in the EU easier for people of the nationalities, and particularly those that have got US dollar denominated currencies. So to summarize in one sentence, it would be act now to avoid disappointment. So timing is everything, and the programs are unlikely to get any more attractive or affordable than they are now. And if anything, more likely to become more expensive in the future.
Brilliant. Ed, thank you very much. I've got a few questions. A couple of people have dialed into the call because obviously with Zoom you can just take the audio as well. One of the questions here is, do I need to learn Greek to obtain a visa if I buy a property in Greece?
That is one I'll have to revert back to. In Portugal, yeah, you have to do the A2 level. Most of the European schemes, and we do, so Spain, Malta, and some of the other schemes, so I'm familiar with all of those. The Greek one will have to double check whether it's B1 level, which is the business level, or whether that's required in Greece. So that's one up to.
So that's, yeah, so that would be potentially a little bit tougher, wouldn't it? There's business Greek. Sounds tricky. And in terms of another question here is, I mean,
so just to clarify that. I don't know if you said visa or passport. For the visa, you don't need to learn any Greek.
Yeah, for the visa.
Yeah,
correct.
Not
yeah,
required for the visas.
So you get your residency visa and happy days. Only if you want to do citizenship, maybe then there's.
Yeah, and the same for Portugal. No Portuguese required. But if in 5 years' time, you say you want to apply for a Portuguese passport, that's the point in time they say, okay, we'd like you to have made some effort to integrate yourself into Portuguese life, to have some sort of basic conversations at the supermarket and so on. They ask you to take that beginner's level test.
Okay, and then another question, and you mentioned it yourself, potentially there's some changes that may be, in the offing. So what happens if, for example, the government of Portugal change the program after I've invested into a property? So I bought a place, the Royal Obidos, for example, and then things change. What happens?
As long as the important thing is that it's a qualifying investment at the point in time you make the investment. If the rules change afterwards, this is the EU rule of law, they're not going to retrospectively go back and change the rules. And as a case in point, the rules changed in January this year, taking out residential. But for all the about 10,000 people who purchased residential property before the 1st of January this year and applied under those rules, they're still on the path to citizenship, still have their golden visas in place, and will be able to renew them. So what's important is that the property qualified at the point in time you made the investment. So as long as you've made the investment before any rules change, and the rules then subsequently change and make it more onerous and less favorable, then good for you. You got in beforehand before the rules changed.
Okay, thank you. Another question here, which basically what is needed in terms of physically being there to buy these properties? Is it, does the client have to fly over to Portugal? How does it work in simplistic terms? This gentleman is in California.
Okay. No, you don't need to fly to Portugal. Of the 143 that we did last year, I think probably 3 or 4 people actually came. This year I've met 2 people who wanted to come and see the properties. But generally speaking, no, this is something that we're doing with clients remotely. We have detailed presentations going through floor plans and prices and views. Often we have some video recordings because I or one of my colleagues have physically been to these developments and looked at them and gone through them. So we're well used to doing these remotely. So clients can come to Portugal, and I'm happy to do so, but vast majority of people, this is something that we run through. If someone says, okay, I'm interested in Portugal Golden Visa, then we're looking at, okay, what's the budget in terms of the investments they're looking to make? What's their priorities? So they're looking for type the minimum amount of capital possible, but to the extent that perhaps compromising on the investment return that they're going to make, or have a slightly higher budget. I want to make the maximum investment return. And that's where, for example, Obidos fits in as an investment. So the investment return is very strong, but it is on the higher investment tier. So we're typically then narrowing down with the client saying, okay, which of these boxes are you really going to fit into? In which case, here are the 2 or 3 developments that suit you best. Go through in more detail, pros and cons of each one, make a selection, choose a unit, done remotely.
Okay, thank you. Another couple of questions here. Kevin is asking for the Portuguese commercial investment. Does it all have to be in cash?
Okay, so you have to have put in the required investment level for that tier with your own money. So in Portugal, there are, say, 4 investment tiers. So if it's a new build, it's either 500,000 or 400,000 if it's in the Algarve, so southern Portugal. Or for a refurbished property, and then refurbished or an older property means more than 30 years old, it's 350,000 or 280,000 in the Algarve. So you have to have put in that much of your own money. Now, occasionally there are properties and investments that we make where the property value is higher than that. So we had a project earlier in the year in Lisbon, the Hyatt Regency. The units there started around 700,000 or 800,000 euros. It's a new build, it's in Lisbon, client has to put in 500,000. But the extra 200,000 or 300,000 above that you can get a mortgage, and we help clients get mortgages in Portugal for the additional amount if they've selected a property that's above the minimum investment level. But you do have to put in, say, whether it's 280, 350, 400, 500,000 of your own capital.
Presumably you could, not necessarily suggesting this, but presumably you could raise that debt in your own country if you wanted to, I don't know, remortgage a property you had overseas, borrow from family, or as long as it's your cash in your account, so to speak. Yeah,
clients have done a variety of different things in the past. What Portugal is interested in is, obviously they're trying to attract investment into the country, and they've determined this is the minimum level of investment that's required for those different categories, and they want to see the cash coming in. Obviously there's a standard anti-money laundering checks to make sure that it's clean cash coming in, but other than that, they're not too concerned about what's coming behind that. They want to see the investment coming in. So you can't just, unfortunately, put 10% down or 20% down of your own cash and borrow the rest, because that's not an investment into Portugal.
Okay, and I've got one final question for you. Sorry, there's quite a few coming drilling you on. One of our attendees has said, are children below 18 years required to apply for the Portuguese language test for their citizenship? So basically minors, do they have to do the same language test? They'll probably be very good. They'll probably be very good at it, actually. It's
yes, yeah. I'm pretty sure my 5-year-old is going to be better at Portuguese. Well, she already is better than Portuguese than everybody else in the family. So yes is the short answer. Children also have to take the language test. If the child is under, I think it's 10 or 11, at the time when they're taking the test, so the test would be typically 5 years on, it was the normal time to do it, so therefore the child had to be quite young at the beginning. There is a shortened version of the test, but at a high level, yes, everyone has to take the language test.
Yeah,
but it is, as I mentioned, it's A2 is beginner's level. The pass mark is, I think, 55%. It's not designed to be a barrier or sort of a test in that it's an encouragement to sort of become or integrate yourself slightly into society. And you don't have to apply for citizenship at that point. It's not like at 5 years you've either got to do it or use it or lose it. You could do it at some stage in the future. You also get the option to apply for permanent residency after 5 years. So you can apply for permanent residency, and that affords you essentially all the same rights other than a passport. And there's no language test required. So if you were concerned about it or felt that, I don't need an EU passport, then just apply for permanent residency, and you can keep that forever. Or if in X years time afterwards your Portuguese has got the standard, or you choose you want to have the passport, then you can apply at that point.
You apply for it. Okay, brilliant. Well, that's it on the questions front. I think that kind of wraps it up. We've done time. We've done about 32 minutes or so, 33 minutes. So thank you very much. Ed, anything from yourself to close with?
No. Thanks. And thanks everyone for joining. We'll be in touch, I think, at the end of after this, just to make sure you've got everyone's contact details. I think there's going to be a YouTube link to the videos. If there's anything that you want to watch back and go over again, then you'll be able to do so.
We'll send that out. Okay, brilliant. Excellent. Great. Thank you very much. Good morning, good afternoon, and good evening, wherever you are in the world. Thanks for joining.
Thank you.